welcome to Unified Media Dropping Gems Podcast. Let's get
Unified Media Podcast, Season 4, Episode 8, Crypto, Stocks, and maybe some Forex trading if we could get Survival in here. We begin this episode with touching base on this specific topic. Our discussion will revolve around investing in crypto, stocks, and Forex. Setting yourself and family financially through wealth building tools is a necessity. All forms and industries should be considered. Hence, like technology and real estate are good places to start researching. Like and share this video to those who will find this information useful. Tune into the show once a week, every Sunday, a little after 8 p.m. Eastern Time, live on YouTube, where we have raw, uncut, open discussions that can range with insightful and educational information across the board. Other episodes will include past and current events, trending topics, conspiracies, personal journey, and so much more. We also have special guests to shed light on who they are and what professional industry they're in. And today we have a special guest for you. If you'd like to be a guest on the show, email dropingemspodcasting@gmail.com with your name, business, industry, social media info, and brief bio. Hosted by yours truly, JR The Truth and Aki ONTL The One. Subscribe to the channel and hit the notification bell to support the show. We're going to open up really quick with this explanation about Bitcoin. I'm going to introduce to you guys the special guest. We're going to get through what we've been through our last 7 days, our last 2 weeks, and we're going to get right into the episode. Enjoy this quick explanation about Bitcoin and the future of crypto.
What is Bitcoin? What does Bitcoin do? Is it perfect? Neither was email when it was invented in 1972.
This is the greatest Bitcoin explanation of all time. If you have a family member that doesn't quite understand cryptocurrency, send him or her this. They will thank you.
Thank you for the opportunity to speak with you today. My name is Peter Van Valkenburg, and I'm the Director of Research at Coin Center, an independent nonprofit focused on the public policy issues affecting cryptocurrency and public blockchain networks. What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman.
Hey traders, welcome back to the TradingView channel. In this video, we're going to be introducing you to our all-new TradingView Smart AI Indicator.
The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money. And it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their Bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. but it is working. And the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet. And Bitcoin is just the beginning. If we can replace private payments infrastructure, then we can replace other private choke points to human interaction as well. Now, why should we want to build more public infrastructure? Why should we embrace blockchains over corporate intermediaries? Why should we tolerate their inefficiencies and work to make them better? Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasingly grave. So roughly half of all Americans, 143 million people, had their social security numbers exposed to hackers because of a breach at Equifax. The SWIFT network has relayed hundreds of millions of dollars in fraudulent transactions because of hacked member banks in Bangladesh, Vietnam, Ecuador, and Russia. The FBI suspects now that the largest of these hacks was perpetrated by North Korea. Corrupt, low-level employees at an Indian bank, Punjab National, were able to fraudulently certify SWIFT messages, stealing $1.8 billion. It's the largest electronic bank robbery in history. In fact, it's the largest bank robbery in history. In October 2016, an estimated 1.2 million internet-connected devices were hacked and turned into a botnet that for several hours made prominent websites unavailable across Europe and North America, including CNN and Fox News, the New York Times, and the Wall Street Journal. Increasingly, physical machines are being connected to the internet to augment their capabilities. They're wired through servers that are owned and maintained by private and trusted intermediaries, the so-called Internet of Things. Pacemakers from St. Jude's Hospital have been hacked. Baby monitors from TrendNet have been hacked. And Jeeps from Jeep have been hacked to the point where they can be remotely commandeered and driven off the road. Now, those vulnerabilities are inescapable in systems that have single points of failure. It doesn't matter if the point of failure is a corporation or if it's a government. There shouldn't be a single point of failure. Similar choke points existed before the internet. If you wanted to deliver a message, you'd have to go through one of 3 television broadcasters or a handful of newspapers. Private corporations are essential, but no critical infrastructure should rely on 1 or 2. The internet removed single points of failure in communications infrastructure and ushered in a wave of competition among new media corporations building on top of its public rails. Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.
And one more clip just to expand on that. Here is Brian Brooks, the former United States acting comptroller of the currency, explain the difference between Web 1, Web 2, and what cryptocurrency is Web 3.
So the characteristic of Web 1, if people remember their original AOL account, was an ability to look in a curated walled garden at a set of content that was not interactive, but was presented to you on AOL the way that Time Magazine used to show you the articles they wanted you to see inside of their magazine. Just you could see it on a screen. The innovation of Web 2 was that suddenly you could not only read content, but you could also write content. This is when the blogosphere became a big thing. People remember this from the late 90s, the early 2000s. The reason for the centralization of the internet, of course, was that all of that activity was being monetized by a very small number of companies. Facebook, as the chairwoman mentions, Google, and 2 or 3 other companies. What makes Web3 different is the ability to own the actual network. And that's what crypto assets themselves represent, is an ownership stake in an underlying network. So when you hear people talk about, for example, layer 1 tokens, what they mean is this is your reward for providing the ledger maintenance services, the computing power to the network that on Web 1 and 2 was done by Google, right? So now people in my hometown of Pueblo, Colorado can actually own the Ethereum network, but they can't own the internet. That's owned by Google and a few other companies. That's what the Project of Crypto is all about, is allowing people to directly own the networks that have native assets that are supporting it. And that's the nature of decentralization, where the token holders are the people who control the asset,
Okay,
not
so the
Google.
token holders for our language here on the Hill, those are digital assets, right? Which are the keys to open up the ledger for you to participate, right?
Correct.
So describe to us how those digital assets fit into this internet revolution, Web3.
So the concept is that you have sort of application layer tokens and you have protocol layer tokens. So if I'm an owner of Bitcoin, let's say that I'm a miner of Bitcoin, somebody who actually creates Bitcoin. The Bitcoin is the reward I receive for doing the work to keep the network operational. And that allows me to own a piece of the Bitcoin blockchain. Or take Ethereum, which is easier to understand. The Ether token represents an ownership stake in the network, but on top of that network are all kinds of apps that get built on the network, much like the apps on your phone depend on the underlying network existing that lets the phone operate. And so people will make judgments about which network is likely to win, and they will invest in the tokens in that network much the same way you might invest in Google stock because you think Google is going to scale access to the original internet. The difference being here, you can vote on what happens in the future of a proof of stake network, for example. You can get rewarded through a proof of work token for maintaining a ledger on something like Bitcoin. But the real message here is that what happens on the decentralized internet is decided by the investors, versus what happens on the main internet is decided by Twitter, Facebook, Google, and a small number of other companies.
If
Oh man, it is decided by the investor on where these ledgers and these decentralized networks go in the future. Powerful, powerful statement for those that don't understand. That's why we have our very, very special guest, the legend himself, Crypto Cody. I was able to meet this gentleman on an application called Favorited. Now, this man has woke up bright and early before the world at 7 in the morning, all the way in Thailand, to tap in with you guys, to give you guys the gems and the information and the experience in the years that he's invested and researched and put his blood, sweat, and tears into these networks. And he's here today to give you game and to also take notes, because he's about to set off his classes on this particular network here on StreamYard.com. Shout out Crypto Cody, man. We appreciate you being here today, brother. How you been?
Nah, shout out to you, J-Hard, the truth, man, and your team, man. Shout out to you, Dewan, man. Appreciate the opportunity. And like you said, I'm already taking notes. You already put me on game. I knew nothing about StreamYard. I didn't know, for real. But yeah, I'm about to kick it off. You know, I've been into crypto for some time now, like really focused since 2019, diving in hard, like, you know what I mean? Like networking, going to all the conventions, going to hackathons. Like I started out as like an investor, right? Just investing, then got into like trading, right? Then it became profitable. Then I was like, man, let me see what this is. So then I started diving into the technology, you know, based upon what I invested in. I'm like, okay, I invested in Solana. Solana went up. Let's see what this is. Like, who is the founder? And that's the thing about this technology. Like in the video we're saying, not only can you like follow every transaction on the digital ledger, right? You're able to like, so that's like at the highest case scenario. And that's what attracted me to it, was I'm seeing all the transactions, whatever, it's $1 billion going in the market, $1 billion leaving the market. You're able to see that. And then you're able to talk to the founder that created this thing. You know what I mean? You got your money in this DeFi protocol that's getting you 20% interest that you never got before. And you're able to talk to the guy that created it. You know what I mean? So that's why I'm in Discord. That's why I'm familiar with Discord, because Discord allow me to contact these founders and CEOs of these digital assets companies. You know what I mean? I've been in meetings with these guys in Discord. You know what I mean?
Really? So these owners of these digital assets, these $1 billion companies, also utilize Discord.
100%, 1000%.
Yeah, that team.
Discord, Telegram, which I really don't like. Discord, Telegram, Twitter is the way to get in. Like, you got to change your mind frame about cryptocurrencies, right?
Okay.
You got to, like, that's why I like the video you showed, JR. It threw some analogies in there. It got me thinking. Like the analogy of crypto being like email back in the days. I use that analogy as well too. Like some of these assets like Solana, Ethereum, I compare it to Yahoo or you know what I mean, or AOL. They're the leaders in the space right now. But who's to say in 5 or 10 or 20 years they might not be around? It might be a Google that's coming now. Everyone uses Google as a search engine. 20 years ago it was Yahoo. You know what I mean?
Right.
So the space is going to continue to change. That's why it's an ongoing education. I'm ongoing learning. The things I taught 5 years ago, I'm not teaching. You know what I mean? It's different ways to how to get a wallet now. It's different coins to invest in. You got to continue rebalance your portfolio. A lot of people invested in a coin called Terra Luna, and it's not even here anymore. You know what I mean? It's like you made millions, lost millions, and it's not even here. Forget about it.
Yeah.
So it's a constant, and it's not like, that's why it gets a bad rep, because people be like, "Oh, that was a scam." Not necessarily. It was just a failed company. It was just a failed company. You know what I mean? That's why research is important. There are scams. There are a lot of scams, but some of this stuff is just failed companies. You know what I mean? It's, imagine like there's a guy. What's the guy? Kevin O'Leary. He has the startup stuff. That's what it is. Every startup you invest in is not gonna make it. So you know you got to take your bets and you do your research. That's why research is important. Rebalancing your portfolio is important. You know what I mean? And balancing your portfolio in a general way is important. Having like at least 25% of it in Bitcoin. You know what I mean? Some people do 50%, but I suggest at least 25% in Bitcoin, because Bitcoin is the leader in the space, right? It's the one that everything goes upon. If you're trading, everything's based upon Bitcoin.
Yep.
You know what I mean?
Now I want today's teaching moment to be very digestible and very easy to consume.
Yeah, calm me down. Yeah.
No, you're good, brother. You're good. So for the ones that are tuned in and for the ones that will share this information, I first want to see if we can take something from the video that resonated with me. I want people to look at crypto, this digital asset, and this ownership on Web3 as this simple notion right here. Imagine me walking into a McDonald's, walking into a Foot Locker, right? Purchasing a sneaker. And then because I purchased the sneaker so many times, they decided to reward me with a portion of ownership towards Foot Locker or McDonald's. That's what I want you guys to think about. Imagine going to McDonald's every week, you order a Big Mac and you accumulate all these points, and then they give you 0.2% ownership of McDonald's, right? That's what happens in the crypto space. Something that has utility, something that has longevity, something that is, being a utilized case based on your research, based on the things that you're into. If you're into gaming, there's gaming. If you're into AI and technology, there's AI and technology companies, one being NVIDIA, that is kind of in the forefront right now. So I want you guys to simply look at Web3 as a ownership case. If you physically walked into a store that you enjoy, you bought it multiple times, and they end up giving you a small percentage of ownership and stake into that company. Now, Cody, you mentioned that you think that a portfolio should be diversified. And I'm going to be completely transparent with you guys while I have you guys here, so I can let you know exactly what my crypto portfolio looks like. And then Cody's going to give me his constructive criticism on what he likes and what he would do differently, right? So my portfolio, I own 15 digital assets.
That's a lot.
That's a lot. Okay, there goes 1 point. We'll get to that in a second. 15 digital assets. I have $1,000 into the digital assets, diversified $50 each digital asset, right? And then I have another $1,000 sitting in a crypto basket. Now, for simple terms, a crypto basket is like a yields savings account at the bank. It builds compound interest based on what I've purchased. Instead of it sitting in the account like a yield savings account, it's sitting in an account, but I have ownership of a particular asset that's building compound interest on it. So I have 1,000 in the market, 1,000 in a crypto basket, right? Now, the 15 digital assets that I own are SEI, SEI, AI16Z, which is an AI asset. I made $250 in 1 week off of that. Stellar, XLM, Cardano, ADA, Algorand, ALGO, Immutable, IMX. Now, when I'm saying, first I'm naming the company and then I'm giving you guys the ticker symbol so you guys can look it up. Hyperlane, Hyper. XRP is XRP. Turbo, also Turbo. Ondo, also Ondo. Render, also Render. Dog with Fat with Near Protocol is Near. Arkham, ARKM. And that is it. That is it. That's my portfolio. Give me your constructive criticism on what do you like about the portfolio and what would you do differently?
I love your portfolio. I love it that it's very diversified in a small amount with $1,000, right? As a new person getting in, I highly suggest that, right? But however, you do have to be active with a portfolio like this, like rebalancing and paying attention, right? But if you want to dive in, this is the way to go because you got 15 different things, a little bit of it, right? And you could actually watch the momentum and the percentage gains. It's all about numbers, right? So you can watch these different things. You're in different sectors, right? You're in finance, you're in DeFi, you're in AI, you're in gaming, you're in like decentralized finance. You know what I mean? You're collecting fees off of people's transactions.
Correct.
Right? You're in render. Render is amazing, right? Render is like rendering images to the blockchain now. And Render is actually a real company in real world. They rendered stuff for HBO. Like it's an official company in the real world, and they're taking their technology and moving it onto the blockchain. That is amazing. And they already partner with Solana, and I can imagine they're going to partner with other big blockchains. And
absolutely. Love that.
And they have a system built into Apple already Render is crazy.
And guys, when he's breaking down DeFi, gaming, technology, etc., what he's telling you is that the digital assets are in this pocket of industry. Right? Just so you guys can understand it. Go ahead, Bub.
Yeah, just different categories. How they put the coins in investing. So, like we got like market sentiment. Like people are going to talk about narratives, right? So once media grabs these certain narratives, like there's a narrative talking about DeFi. There's a narrative talking about AI. There's going to be narrative talking about real world assets, right? So that's why I was big on Render, because Render is a real world asset, right? So is XLM, like XRP. People are going to use that in the real world to make transactions. So a lot of times in my research, these categories, these narratives that people are pushing, you'll notice that some of these coins cross these narratives. Like XLM might be in two or three narratives that people are pushing, and so might Render. So those are the coins that I'm really looking at heavy because they're in different narratives that are being pushed by the media. So you having coins that are in different narratives and cross narratives is amazing. Like, you know what I mean? Like Donald Trump, the president, talked about XRP and Cardano, right? So that alone gave those coins a little push, and is going to continue because as investors, price have memory, right? So no matter where the price is now, remember people got in at different price and everyone's in and out at different prices. Just remember the price you get in at and remember that you need to get out at a certain time. But I love your all right, back to your portfolio, right? So I like it. I love it as a new person getting in, because you're able to watch all these different things and to rebalance it and focus on what you really want to focus on. Like I would probably, you're gonna narrow it down to 5 to 10 actually, and focus more money into those. That is the goal.
Yeah,
is to go deep, not as so wide.
Right.
So find 5 that you really rock with and dump more money.
Dump more money into it. I appreciate.
Find the conviction in 5 of those.
And those 15, find the 5 conviction that your heart is set on, and go crazy.
Like you gonna dump whatever.
Right. Damn, that
type of conviction.
That type of risk taking is great. Now, granted,
but don't do it. But that's the conviction
I'm a risk taker. You know, for the ones that are here, I'm definitely a risk taker.
One too.
But I'm also a safe. You know, if 2 assets are down and one is pumping, I'm good. I'm happy. You know what I'm saying?
Yeah.
Like 2 weeks ago, I shit you not, when Bitcoin hit, 120, A1, AI, the AI company I invested in, I made $250 off of a $50 investment.
That's the benefit of having a balanced portfolio.
That's right.
In different narratives, in different sectors, right?
In different sectors.
They might be hype on AI this week, and then AI coins are going good. You know what I mean? So so that's why it happened to me last week too. I've been investing in certain DeFi coins, and DeFi hasn't been popping, right? DeFi is a sector that pops after everything else pops, because it's like everyone's made a bunch of money and now they want to invest it here and take more risk, and you know what I mean? Now they're like, shit, what do I do with all this money I made? Can I get a little interest on it somewhere without taking so much risk? That's DeFi, right? DeFi is decentralized finance. It's you becoming the bank. What you're gonna do? You're gonna borrow money from the bank. You could lend money to the bank. You know what I mean? You're gonna put your money, like how you were talking about. I think you said you have a 1,000.
I have 1,000.
I call it staked. So it's called staking.
Yeah, staking.
Crypto, where you put your funds somewhere and you're getting at least in crypto 4%. If you're not getting 4% on your crypto staked, you're doing something wrong. There's plenty of places that you can park 1,000, 10,000, whatever number you want of a stable coin in crypto and get 4. Even on Coinbase, you can stake your crypto and get 4%. If anything today, family, if you don't do anything, get a Coinbase account, sign up, KYC, do your ID, send whatever, $100 or $1,000 there. Don't spend it. Just put it in the USDC stablecoin and stake it. They're gonna give you 4% every week on your money. Every week. I know people put $10,000 in there and live off $100 a week.
That's wicked.
Well,
I love
it. I'm in Thailand. Sorry. For a reference, people living off $100 a week in Thailand. So I know people that are living off the interest Coinbase is giving them. So just do that, and then Coinbase has a program, Earn and You Learn. You watch videos and you can earn some crypto. So you don't know you're not like JR. You don't know 15 cryptos to invest in. This is what you do. Get the free ones on Coinbase, right? You're not spending nothing. You're watching a video. After the video, you answer a little question. They give you $1 or 50 cents in crypto. You do that like 50 times. You got $50 in crypto. Thing about crypto, it might not just stay $50. It's gonna go up. This is the year that it's gonna go up. So the $50 you earn today in crypto, by the time November hits, it might be $150. Right? And if you're paying attention, now you can invest in those cryptos that you learned about, and you might have conviction in one of them to put your own $100 or $1,000 in. So now when November comes around, instead of the 50 that you had, now it turns in a little bit more. And to be honest, family, that's how I started. That's exactly how I started. Just a little bit more guidance, and I was into it. So I was going to like conventions and networking people and traveling, just trying to meet everyone in the space. But absolutely, you can take my advice and get a little cheat code, man, and just do that real quick. That'll be the best advice today. Take action today and get results today. That is it.
That's what we're here for, man.
I love that. I love that. Now, before we get into more of this crypto game, the fact that you mentioned staking at the bare minimum is very, very powerful, team. And I want you guys to go on Discord. I want you guys to also check out crypto.com as well, because you can stake in there as well. I already have my referral code in there. I'll make sure to put a Coinbase for Cody, since Cody's pushing Coinbase right now. And make sure you guys, if you want to get more in depth and you want to learn more, his website is right under his name. Founder of, what does it say here, brother?
Crypto Breakthrough Academy. So
Go ahead.
You can reach me all my links are on there, my Discord, Twitter, TikTok. And just to say, I haven't been on crypto.com in a while, but I'm sure when I was on it 3 years ago, they had the same program too. It might not be called Earn and You Learn, but crypto.com, Binance, and Coinbase have these programs where they're paying you to learn. And it sounds crazy, family, but it's all marketing. There's no marketing. They're not marketing to you on TV with crypto. They're not marketing heavy online like that. So they're taking these marketing dollars and just giving them to the real users. The real users of the space are getting the marketing dollars in different ways, whether it's airdrops, Earn and You Learn, or giving them to different people in the community that's handing them out. So there's a lot of free marketing crypto running around because these founders have allocated crypto for marketing, and it's right there for it. And it's different ways that they market, and it's not the traditional ways of marketing.
Now, let me ask you a question, Cody. If I had $1,000 and I knew about staking and I knew about a couple different digital assets to throw in the market, how would you allocate $1,000 right now in today's market, 8/3/2025?
I would do exactly what I just said. I would take the $1,000, put in USDC, stake it, get that 4%
every week.
Every week, like right now, I would do it right now today. And this week, I would knock out all the Earn You Learns. Right, I'm trying to fast track it right now. Right now is the time. Do all of that. Now I got all these cryptos in my portfolio for free, and I'm watching them perform. Right, and then now I'm gonna decide within a month which ones I want to add my own money to, add my fiat to, besides Bitcoin. Now,
if let's just say my $1,000 in 1 year turns into 1,200, right? Whatever it is, right? And then somehow my taxes come in. I get $5,000 for my tax money. We're not going on vacation, team. We're not going on vacation. I want you to grab your tax money in January, February, March. Grab that money. If I get $5,000, Crypto Cody, what are my five convictions, digital assets that we going all in on right now?
You got to balance it out, right? So you got to take these categories, like I said, these narratives. Me personally, this is what I'm doing, right? I'm definitely gonna name an AI coin. I'm gonna name the sector, but you're gonna have to find your own AI coin. So I'm definitely gonna get an AI coin. I'm definitely gonna get XRP or XRLM, a finance coin, right? And I love as crazy as it sounds, I love Chainlink because Chainlink is a coin that is connected in the blockchain. Everyone is using Link, right? Link is a coin or asset that it's kind of like Render, right? It's bringing the real world information to the blockchain. So if you want to know like the weather right now on the blockchain, you're using Chainlink to bring that data to the blockchain, basically from Web 2 to Web 3. So the stock price, the price of stock, so any live information is being transferred to the blockchain through Chainlink. And you know, that's the funny thing about crypto, right? Not all of the prices of these coins and cryptos reflects the technology and the use case. And that being said, investing in real stuff like Chainlink, you balance it out by investing in a meme coin. So you find 5 to 10% of your portfolio, I hate to say it, should be invested in a meme coin because it does numbers.
In your 5 convictions, one of them is a meme coin.
Yeah, it is.
Okay.
It is, but it's not. It's only 5 to 10%.
5 to 10%.
Of the money.
Okay. Okay. So right now I got 1 AI, 2 XRP, 3 Chainlink, 4 meme. What's your number 5?
I said Bitcoin, right?
And Bitcoin.
Yeah, Bitcoin.
I just wanted to post it up, team. So make sure you guys are staking and earning while you learn. And then these 5, I want you guys to do research. Take these notes down, team. This is very important information. This free game. AI, XRP, Chainlink, a meme digital asset, and Bitcoin. Now, some people will probably say Ethereum. How do you feel about Ethereum crypto, Cody? Because
this is where the research comes in.
Go ahead.
This is where the research comes in. So the next category, or we want to say narrative, right, is going to be layer 1, right? So remember I was speaking earlier about it. We're comparing this time to like the .com era. So how I feel about Ethereum is how I kind of feel about Yahoo or Google. I feel like Ethereum was the first leader in the space, right? So they're like Yahoo, but I feel like somebody else is going to come and kind of challenge them and take that space, right? So yes, family, Ethereum might not be a bad play right now for maybe a year, because they are the leader in the space. They have so much. They have all the developers are there. All the money is there. People done made a bag of money, right? People done bought Ethereum at $100 and it's at 3,000 and something now. So Ethereum people are rich, right? Their people are they're in Ethereum. It's there. So it's gonna take a while for the Solanas to catch up, the Cardanos to catch up, the Avalanche to catch up, the algos to catch up, right? But my suggestion is to do your research. Look at layer 1s. They're called layer 1 blockchains, right? Find a layer 1, and I would look at ones that are in the top 25 cryptos, top 25, top 50, even top 50 cryptos are good, right? So look up layer 1 cryptos that are in the top 50, and where you look them up at, coinmarketcap.com. coinmarketcap.com or coingecko.com. You could use either 2 of those. It's just based upon what interface you like. They're trusted websites. They've been in the space for years.
Do me a favor, Nora. Can you grab from the chat, Nora, where I put stake and earn, the 5 convictions, layer 1's top 50, and this coinmarketcap.com? Can you please grab, copy, and paste that and put it in the open chat on Discord for me, Nora, please? Thank you so much. I appreciate it. Go ahead.
Yeah, so the research, family, the research is going to come with you picking your own layer 1. You should have a layer 1, but I believe you should pick your own based upon your research. And that could be Ethereum, Solana, Cardano, Avalanche, Algorithm, right? Look at those. Look at those 5. And once you pick your layer 1 that you like, the next step, the next cheat code is to invest in that layer 1's DEX, right? That is the automatic cheat code. Because if the layer 1 coin is gonna go up, the DEX is gonna go up. What is the DEX? The DEX is the decentralized exchange. The DEX is where on that blockchain people are gonna trade that coin. So on Solana, if somebody wants to buy Solana or buy a meme coin on Solana, they're gonna go on this DEX, decentralized exchange called Radium, right, and trade their coins. So, and you invest in the DEX because you're getting trading fees. It's minimal fees. Like to trade on Solana, it's like 3 cents or less, right? But millions of people are trading. So these fees add up, right? Every trade, you know what I mean? So you invest in the DEX, you're getting trading fees off of everyone's transaction. So it's a no-brainer. If the Solana coin goes up, the coin of the DEX is going to go up. So you find the number 1 DEX on that exchange, on that layer 1, and it's a automatically, it's free game. It's free game.
On the number 1 DEX in that layer.
Yeah. So if you buying Cardano, you need to buy their DEX, their number 1 decentralized exchange on that blockchain. And I'm not telling you what it is. It's for you to do your research.
Right.
I'm giving you the game. That is the game. You buy them. If you like Solana, if you like Avalanche, if you like Algo, you find the DEX on that layer 1, and you buy that coin too. When that layer 1 goes up, the DEX goes up. It's only that.
I'm about to be on my shit tonight, bro.
Yeah, got me ready to get back into it. I was lacking in it, so I'm like, hold on, I'm really lacking now.
Right. This is definitely some new game for me. Find the DEX, team. Find the number 1 DEX in that layer 1 on the blockchain. Amazing stuff, Crypto Cody.
Just look at the research, because it was on Ethereum, the DEX was Uniswap.
Right.
So I'll give you a free one. I said I wasn't gonna give it to you, but I'll give it to you. All right, Uniswap. So Uniswap, if you like Ethereum, buy Uniswap. I'm telling you, especially right now at today's price.
I love that. I love that.
There we go.
I'm about to be on my research game today for sure. Now, real quick, before we get into the halftime, because I'm gonna be playing a Forex video next, and then we're gonna have the pleasure of Survival Skills giving us game on Forex and the investing in Forex trading. What can people expect from this academy that you provide? Like, what are some of the things that you can give in terms of like what you're hosting and what you're providing and where it's being provided, so they can understand the context of it?
Well, I mean, people are gonna understand. I'm gonna walk everybody through everything, like from a beginner level, right? Just like the video we watched earlier. If you don't understand what the Bitcoin ledger is, I'm going to break it down to you. I want you to completely understand the technology and how it works, because I believe it's the lack of understanding and conviction what's stopping people from not making this money, man. Like, if y'all understood what was going on, y'all wouldn't hesitate to put the $1,000 in the Coinbase and get 4% interest on it right now. So it's just like, I want people to understand. It's just I want people to understand before we just dive in and start trading, right? You know, I just want people to understand. So I'm building a community of people that want to understand and want to share the knowledge and use the knowledge and use the information that we get, because the knowledge we have is practical. We can use it, apply it today, and see results. And that is the key. And that's why it's no fluff. You can't argue with what I'm saying. Like, you can hop in the Discord right now. I can share my screen with you, walk you through setting up a wallet, and we could go trade and invest. So
I love that.
That is no fluff. There's no secret. We're able to talk, communicate, and I'm meeting people where they're at. I mean, like, JR, it sounds like you're ready for me to show you some DeFi plays. So we could go in there and I could show you where you can make some DeFi plays, man. And where you're at, depending on where you're at, we can start, you know what I mean? Like, I want to show you how to lend out your money right now. That's what I really want to show you. Then I want to show you how to provide concentrated liquidity to these dexes I was talking about. These dexes I was talking about,
Right.
the coins that people are trading back and forth.
Mhm.
If you have those coins, you can provide them to the dex, and people are paying their. Now you're getting more fees because people are using the coins that you provided trading back and forth. So that's another play. So I'm meeting people wherever they at, holding their hand, walking them step by step. It's like it's the closest thing you could get to a one-on-one mentorship.
That's great. That's game, man. That's game. Now,
CryptoBreakthroughAcademy.com. I got
yeah,
I have to go ahead and repeat that for those who are
Now,
watching and want to go ahead and get involved.
absolutely, 100%, 100%. Now, are these classes? How do you? Where do you host these classes? You said on Discord.
Yeah, host them in Discord, but now you giving me an idea to reach a broader audience. Maybe I could, do them on StreamYard and start my little YouTube going.
There you go.
So
There you go.
I thank you for that, man. Thank you for the
Absolutely,
nuggets.
absolutely,
Yeah,
absolutely, man. Absolutely. Now, I know that an academy isn't cheap to host, and these things can't be free. What are your fees currently for mentorship?
So yeah, right now it's free for my small community.
Oh wow.
Yeah, for this month right now. For this month. But after that, it's just gonna be you're gonna purchase my book. And I have a crypto guide book, and you just purchase the book for $29.99.
Love that.
And the courses, I have 10 courses that go along with the book.
Okay.
So basically, you
purchase
the book. You don't have to buy the book, but the courses, it's just like class. You could go to class and just sit there and try and learn. But if you have the book, it makes it a little bit easier for you.
I love that. I love that. So he's giving you the game for free.
Man. Yes, the game is free, but if you want to take it serious now and take notes and have more questions, then there's a book. It's $29.99. Once you buy the book, you're in the community, and then there's different levels. If you want to take it higher, like trading it's more risk. Like I'm showing people how to take $100, turn it to $1,000 instantly. So that there's more cost of those type of courses, which is like. But those courses are like $4.99, right? But people are making that back in the same day,
right?
So
I love that.
So yeah, but the entry just to get in, learn crypto, invest in. Like I said, I'm giving you the free options. Coinbase.com, crypto.com, Binance.com. Earn and you learn. We get you started. Once you're there and you build your foundation, all right, then okay, now you're ready to step up and we can go. Let's join the community.
100%.
It's $29.99. Just get the book.
100%.
You in there and you locked in.
I mean, once you start locking in and you're making the money that you're making, you grab your profit and you invest back into the idea of what's being provided. So for sake of conversation, if I got 1,000 and it's earning 4% a week, and I make $250 off of my 1,000, I'm gonna grab that $250. I'm gonna buy the $29.99 book, and then I'm gonna apply myself even more. I'm gonna be hustling, right? My regular 9 to 5, my side gigs, whatever. I'm gonna put enough money away to get the $4.99, and then when I'm ready for the snipes, for the real life.
Well, actually, the first step is paid for today. The $29.99 you get by signing up to crypto.com or Coinbase and getting the free earn and you learn.
Look at that.
They're going to give you $29.99 by watching videos.
There you go. There it is.
If you want, you can just take that, get the course, and then now you rolling.
Damn. There you go.
So, yeah. Get in my community. It's free.
Hit that link. Get in the Discord. I lead by example. I'm in there right now. Hold on. I'm on the Discord right now. Let me see. I lead by example because look, I'm not playing with it. You see this logo right here? It says crypto. Where is it? Crypto Academy book right here. Look, right on my phone. Let me put myself on the big screen real quick for 2 seconds. Damn. We in that Discord. We in that Discord. So make sure y'all get up in there as well.
They are the truth, man.
Yeah. We're gonna take a quick intermission. And we're going to introduce you to one of the GOATs in Forex trading. Team, you get in the GOAT of crypto. With Crypto Cody, you getting the GOAT of Forex trading now with survival skills. Do not miss this. After this intermission, we'll come back after a short break. We're going to play this video, though, for about a good 5-10 minutes so you can have a slight understanding of what Forex trading is and investing. Explain. Check this out.
No, I'm glad I'm here for this.
Have you ever wondered how the world's currencies are traded? The foreign exchange market, also known as the Forex market, is the largest and most liquid financial market in the world.
This video is sponsored by Skillshare. Visit the link in the description below or shown on screen to get a 2-month free trial. If you shop online, chances are that you've had to exchange your currency for that of another country's at one point or another. After all, to buy something internationally, you often need to pay in the currency of the seller. For many, this act of swapping currencies probably isn't all that interesting. And in fact, if you're Canadian, it's probably been more of a pain in the neck than anything else because of all the cool stuff you can only buy in the States. But outside of being an important step in international commerce, buying and selling currencies is a vital component of the financial markets. Not only do most investors need to understand Forex to invest in stocks internationally, but for many, the act of swapping currencies is in and of itself investment opportunity. Now, holding cash is rarely seen as being a good investment over the long term. It's why investors trade in their cash for stocks and bonds. But many traders dedicate their entire careers exclusively to foreign exchange. And some investors hold foreign currencies right alongside their stocks and bonds in their portfolios. Why? I'll answer that question and more on today's Plain Bagel. Foreign exchange, Forex, or sometimes just FX, refers to the act of trading different currencies for one another. Different currency pairs will have a market-determined exchange rate that tells you how much the currency can be exchanged for in terms of another currency. This quote can either be a direct quote where your own currency is the numerator, or it can be an indirect quote where your currency is the denominator. As an example of an indirect quote, for $1 I can purchase 0.85 euros, 7 Chinese yuan, or 105 Albanian lek. For anyone carrying out international trade or investing where different monetary systems are involved, exchanging currencies is a necessary step. For this reason, the Forex market is considered one of the most important, and in fact, the largest market in the world. But while the average individual probably doesn't worry much about Forex until their next vacation, it's an area some professionals dedicate their entire careers towards. The reason? Exchange rates for currencies fluctuate. And for some, this presents an opportunity to make money. For example, consider a US investor who exchanges 1,000 US dollars for Canadian dollars. At the current exchange rate, they would receive roughly $1.35 Canadian for every US dollar they turn in, meaning in total, they would end up with $1,350 Canadian. Now imagine that a year later, the exchange rates have changed, and Canadian dollars are now trading at par with the US dollar. This can occur either because the US dollar has depreciated or lost value, or because the Canadian dollar has appreciated or gained value. Either way, the investor can now exchange the Canadian dollars back into American and end up with 1,350 US dollars. In their domestic currency, the American investor has now earned a return of 35% just by changing their money into a different form of money. Now, developed currencies rarely fluctuate by this amount. Even a 1% change can be considered a sizable shift depending on what's involved. But currencies are an easy thing for traders to leverage. So part of the reason Forex trading is so popular is because individuals can borrow quite a bit of money to translate a 1% shift into a much higher return. As for how traders determine which currencies to buy and sell, there are a number of different approaches. Some will use technical patterns, trying to identify trends in a currency's exchange rate that reveal where it will go next. But a lot of currency trading involves fundamental research, just like stocks. Although obviously people subscribe to the different schools, we'll focus on the fundamental in this video. Now, there are a lot of factors that can influence which way a currency goes, all of which investors need to be aware of when doing their own research. But they all tie back into the supply and the demand. Just like other assets, currencies have their value determined by the number of people buying the currency, or how many people are exchanging their own currency for the one in question, as well as the amount of the currency available. On the supply side, most people are aware that fiat currency essentially comes from the central bank, which is often a separate entity from the government and creates government-regulated money to be used within the country. As with other things, the more there is of a currency, the less valuable a unit of that currency becomes. This is the basic idea behind inflation, which causes prices within a country to rise. And in the same way inflation reduces the amount of goods that a currency can purchase, it likewise reduces the amount of foreign currency that money can be exchanged for. So a country that sees its inflation rate rise will often see its exchange rate fall, all else held constant with the other countries. Central banks can also influence the demand side of currencies, something you might see if a country pegs its exchange rate. This is when a country will try to fix its exchange rate relative to another currency, oftentimes the US dollar given its international prominence. If, for example, Canada wanted to keep its exchange rate with its southern neighbor at 75 cents, the central bank would buy Canadian dollars when the rate falls below this amount, and buy other currencies when it rises above, in order to keep the rate consistent. Many countries, however, will let their currencies float, and while they may still participate in transactions through their central bank, the exchange rate can be influenced by a plethora of other factors, all of which have to do with how many people, including both citizens and foreigners, are using the currency in question. Economic growth and higher net exports, for example, boost a country's exchange rate, because in the former, citizens and businesses are using a currency more to buy goods and pay higher salaries. And in the latter, foreign countries are exchanging their own currency for the currency in question in order to buy that country's goods. In Canada, for example, it's common to see the dollar appreciate when oil prices rise, given that the country is an oil exporter and that will lead to higher profits. But when prices fall like they did in 2015, so too does Canada's net exports, and this will lead the loonie's exchange rate to decline. Investors are another party that play a key role in determining a currency's value. Countries with more attractive investment opportunities will likely see more investors buying its currency to invest in the country, whereas those that offer lower interest rates and minimal returns will see lower demand. This is also why the overall political and economic stability of a country is a key determinant of a currency's value. If a country is rife with crime and lacks the necessary regulations to protect investors, it is unlikely to draw in the foreign money, which means fewer people exchanging for the country's currency. All these factors combine to determine the direction of a currency's exchange rate over time. And while some factors may be pushing up the value of a currency,
this is Pod 5, the first fully immersive sleep system. Intelligent, adaptive.
it is the balance of the inputs that ultimately determines which way the currency goes. For example, Turkey currently has a fairly high interest rate at 8.25%, so one might expect its currency to be appreciating. But with their economy suffering and their inflation rate above 15%, the lira's exchange rate has fallen quite a bit over the last few years. Needless to say, Forex can be a complicated area to understand, but this hasn't stopped many investors and traders from trying to master the market. And there are a number of different ways that individuals invest in currencies. Firstly, many people will in fact hold the currencies themselves, exchanging through either a broker or some other financial institution to add dollars, euros, or yen to their investment accounts. Others will use derivatives like futures, forwards, and swaps to gain exposure to the foreign currencies. This basically just means that instead of holding the currency in question, the investors enter agreements to buy or sell, or long or short, the currency for a fixed exchange rate at a later date, which provides them exposure to changes in the exchange rate up until that point in time. I'll leave a link to a video where we've covered some derivatives in the past if you want to learn more. People also have different motivations for trading currencies. Some simply look to speculate, that is to bet on which currencies will increase or decrease in value and invest accordingly. For example, an American may believe that Canada is about to announce positive economic data and may opt to hold Canadian dollars to benefit from the boost. But Forex trading isn't always about just predicting which way the currency is going to move. Some people will simply invest in currencies to take advantage of arbitrage opportunities. We haven't yet covered what arbitrage is, but it basically involves traders finding different combinations of exchange rates that, when put together, will lead to a risk-free profit. Now, the returns from these types of trades are usually pretty low individually, and the market is quick to correct arbitrage errors, so it's not something that can be continually relied upon. But with dedicated analysis, some traders do tend to make a profit in this area. Other investors take a less aggressive approach to Forex and simply use currencies to hedge different risks, namely their currency risk. For example, a Canadian investor investing in US stocks may want to reduce the impact of fluctuating exchange rates on their return. So they may enter some derivative agreements to long or short different currencies. Finally, there are those who simply hold currencies in their portfolio to take advantage of interest rate differentials or for diversification. To the first point, if a foreign country offers a higher interest rate on deposits, investors may purchase that currency to earn that higher rate. And to the second point, currencies have been found to exhibit a low correlation to the stock market. So technically, adding euros, pounds, yuans, and dollars to your holdings will improve your diversification. As you can see, there are many different uses for foreign currencies. And it might start to sound like something every investor should be carrying out. But trading and investing in currencies is very different from investing in stocks. Firstly, there's the risk. As mentioned, currencies themselves don't tend to fluctuate as much as stocks, and most traders need to leverage up the returns from currencies to make it worth their while. Now, this isn't to say that currencies are inherently riskier than stocks, but that added leverage for the same return does add a different type of risk that most investors aren't used to. Many currencies also face inflation, which means that over time, forms of money are losing their value, which adds a hurdle to the return an investor can earn from just holding cash. The currency market is also fairly deregulated. And whereas stocks are sold on centralized exchanges from authorized brokers and dealers, currencies are decentralized and can be bought and sold by all types of businesses and individuals, meaning investors often need to vet the currency dealers that they work with. Finally, currencies themselves are a non-producing asset. Where stocks provide ownership of a business that is actively generating profits, or at least trying to, currencies are simply a medium of exchange that itself is not creating anything of value. Now, this is somewhat similar to investing in gold, but at the very least, gold can be used as an input for numerous things and faces a finite supply.
Powerful. Love it when we're here talking money.
Man.
Love it.
No, that was a definitely good insight on, you know, what it's like to be, you know, with trading versus really with the stocks and the different, you know, worlds they both are, you know what I mean? Because some people do try to or mix it up or can get confused or don't understand the difference.
Yeah, 100%, Aki, 100%. Surf, looking at that video, and you being in this in that particular sector, in that space, what can you take from that video that was easily digestible for somebody tuning in that's brand new to it, to reiterate?
So I'm not gonna lie, while watching that video, it took me way back in time to when I first started. Like, was I ever so young? Did I ever start off so like, dang, like, I'm not gonna lie. Some of the words he was using was so big. I'm like, bro, just I don't know what audience you talking to. So let me go ahead and like let's justify this. Let's go ahead and break it down a little bit, simplify it. Because some of the words you decentralized, the function, I'm like, okay, you're trying to bring me into trading. I want to understand what the fuck you're saying. And I'm not understanding nothing you're saying. So let me go ahead and dumb it down. So for everyone that was out there, that if you was listening to the video, if you followed along with Poindexter, I'm pretty sure that you understood it. For me, I didn't understand none of that, but it did take me back in time. So pretty much the way how I've looked at Forex is like this. When it comes to trading a currency, you can go ahead and get this over time. Okay, so let's go ahead and go all the way back in time to where how people originally got into trading. The way how people got into trading when they did this manually was like this. Let's say, for instance, I tell JR, I say, hey, JR, check this out. I want you to go, I'm going to take a trip to Canada. And here's the thing. My mentor just allowed me to go ahead and borrow his cabin. Okay, he allowed me to borrow his cabin, but here it is. This is what I need you to do. I need you to get $1,000. That's all I need you to do. Get you $1,000, meet me at the airport. That's it. Now, JR don't know what I got planned for this. I just want him to get $1,000. We're going to go over here to the cabin. Now, here's the thing. We arrive at the airport. When we get to the airport, there's going to be what's known as a currency exchange. Everyone is going to see this. When you go to an airport, you will see what's known as a currency exchange. Now, what's going to happen is when we go over to Canada, we can't use the USD. We can't use the United States dollar because basically that's like funny money to them. They're like, bro, what are you doing right now? That's not going to happen. Well, the exchange rate for Canadian dollars, let's put it like this. For every $1 you have in the United States dollar going to the Canadian dollar, the exchange rate would be $2. So, JR, when you turn your $1,000 into Canadian dollars, what's 1,000 times 2?
$2,000.
There you go. So now you got $2,000. So now JR has $2,000 he just exchanged. He exchanged his 1,000 USD to get to the Canadian dollar. So now he's got 2,000. I do the same thing now. I got 2,000. Now the whole time JR is with me, I'm telling JR, don't spend a dime. I don't want you to touch nothing. I got the whole trip. I'll make sure we out there popping bottles. We chilling out there for a whole week, having a good time. Now, at some point in time, the missus tell him like, hey, JR, I know you out there having good fun with skills, but you got to come back home. You know, babies need you. That's what it is. You know, so the family needs you. So now, after a whole week of us chilling, we go back. Come find out when we get back to the currency exchange over here in Canada, you know, it's like, hey, I'm broke as a joke, so I ain't got no bread. Like, hey, JR, you know what I want you to do? I want you to go ahead and turn in that money. JR turns in that $2,000 for us just chilling over there for a whole week. All we did was just have fun. Now, who remembers how much JR had before he had the $2,000?
1,000.
Yeah, 1,000. That's right. He had $1,000. Now, with that $1,000, he's going to go and turn that $2,000 back in. We just chilled over there, Canada for a whole week. Turns in that money. The lady gives him back his $1,000. It gives him an additional $500. Now, she gives you that $500 back. Now, JR, this is just pointing to you. Would you go ahead and get that money back because originally you only had 1,000, or you just gonna go ahead and walk away, say nothing else?
I'm not gonna say nothing to them, and I'm not gonna say nothing to you.
Okay, it's all good. So regardless if you say anything to me or if you said anything to anybody else, bro, basically what we did was we traded manually in the foreign exchange market because of the fact that we were chilling over in another country. That's all it was. So he got an additional $500 just because he waited over time. Foreign exchange market is truly a remarkable, it has the most liquidity in the market. When it comes to like earning money, you can make a lot of money with Forex. However, here's the thing. A lot of people don't find this very rewarding because a lot of people deal with this one thing that we all have: greed. Greed comes over everyone. So for starters, for anyone that's interested in investing, the very first thing you need to work on for yourself is greed. You have to figure out what it is that you want up out of this market. So one of the things that my mentor would go and teach me is about what's your why? Why are you entering into the market? What is this for? What is the what are you going in for? Are you going in for $1,000? Are you going in for $2,000? And you set that as a goal. One of the greatest weapons that you can utilize in any form of trading, whether that is stocks, whether that is crypto, whether that is Forex, you need what's known as a trading journal. A trading journal is more than just writing down what currencies you're going to utilize. It's more so about, why did I enter the trade? What's my strategy for entering the trade? When you have that, this is something that you can utilize each and every single time when it comes to getting into the market. A lot of people, when they first start out, they don't know what this is. They have no idea. They have no clue. Because right now, when you first get in, you're brand new. So for me, talking to a brand new trader, let me say it like this. If you're brand new, would you start off with $100 or would you start off with $50 if you was to get into a brand new market? That's just talking to the whole entire panel. If you was to get into trading for the very first time, you've never done this before, would you start with $100 or $50?
$50.
Okay. You start off with
I just like 100 as a better number.
Okay, you like 100. Okay, so Cody would start off with 100. So basically, Cody has more leverage. He would have more leverage because see, now he has $100. For anyone that would start off, I would tell them to start off with something small because they're getting something brand new. And then I would tell them to trade at a 0.01. When you trade in the foreign exchange market, a 0.01 is just decimal of 10 cents. Every single time you increase that number by 1, that's going to be 10 cents added. So now, if someone does a 0.02, that's 20. 0.03, that's 30. 0.04, that's 40, and so forth. So what I would tell a person if they was just now starting, start off with just a 0.01 to see what is going to happen, to see when it comes to the currency fluctuating. So for starters, the major currency pairs that you'll see is always going to have USD in it. You will have CU, which is Canadian dollar against US United States dollar. You have GB, Great British Pound, so that's GBP / USD. You have the Aussie dollar, so that's Aussie versus USD. And I do believe there's another one, USD JPY. Now, those are my major currency pairs. If anyone ever starts out, you will start off with these pairs and do the same thing I just said. Now, here's the thing. How we get into trading, because I'm pretty sure y'all wondering, like, how do you get into it? In order for you to even start trading, you have to have a broker. The same thing that Poindexter we just said inside the video, you have to have a brokerage. Now, there's many brokers. There's many brokers that's out there. Some trade Forex. Like there's people that trade Forex. There are people that trade stocks. There's people that trade crypto. It's not just Coinbase. There's other brokers that's out there. But in 2024, going into 2025, a lot of brokerages took hit. They did. They took a massive hit, especially decentralized brokers, the unregulated ones. There's two types of brokers that we have out here in this world. You have the unregulated and you have the regulated. Unregulated brokers are the ones that majority of us brand new people get into because we don't know any better. These are the ones that pay the most money, but they don't have the money. So if you're someone that's really like, let's say like with Crypto Cody, if Crypto Cody was trading BTC and he's banging, like I'm talking about, he making massive amounts of money in these banks. Well, if this brokerage, the broker doesn't have the money. So they have to have him lose. He has to lose. So if he tries to get like a return, let's say he calls in, he's like, you know what? I want to go ahead and trade in. I want to get a $10,000. I want to get $10,000 today. And he's doing this every single week. They can't keep up with that. They don't have the money. So with those unregulated brokers, a lot of them got hit and take it out of. So now moving into 2025, a lot of those unregulated brokers. Now, let me get this. Let me go ahead and dump into this too. Well, unregulated brokers, they allow you to trade all those heavy things like massive volatile items, commodities that's inside the market. They allow you to trade crypto. They allow you to trade gold. They allow you to trade silver. These are the most volatile things that you can find in the market. SP, or what's the SPX 500? That's major volatile. US 30, high volatility. These are things that pay you the most money the fastest. However, there's a problem. If you ain't got the leverage, you can lose all money just like that. So that's why I said start off with something small like United States, the major currency pairs like United States dollar. Anything that has United States dollar in it, those are major currency pairs, which you should start out with. So now, unregulated brokers. Unregulated broker, I'll throw this out there, Hugo's Way. That was the very first one I started out with. You heard about Hugo's Way?
Yes.
Okay. So Hugo's Way, everyone loved Hugo's Way back in the day because this brokerage was paying a lot of money. You could trade Euro versus United States dollar. You could trade this pair, and this was like bread and butter. People would run to this pair because it was a slow moving pair, but it paid out a lot of money. So that was a lot of people, they would utilize the United States. They would use the Euro versus USD because this was paying a lot of money. But that was in Hugo's Way, an unregulated broker. You go to a regulated broker, regulated brokers work differently. Depending on what your leverage is, it's going to be it's like 1.50 or so. It's going to be a low leverage. They don't expect you to trade with $50. You got $50, you might as well just say, like, bro, give it up. The only way how you really going to trade with a regulated broker, you need to have at least $1,000. And with these brokers, they'll even tell you, in order for you to start, your buy-in may be $100. It may be $200, $300, $400, $500, $1,000. because they know that if you're getting into this, you're serious about it. Now, one thing I would love about regulated brokers is the fact that this is how you get return on your money, taxes included. So let's say, for instance, some of you all will feel like, okay, I'm making a lot of money, but you want this to be responded to. You want them to report to IRS. You want them to report to the IRS because these are capital gains that you're gaining. If you're gaining this, it needs to be reported to the IRS. Because if you do keep this money and you do not report it after so much, yes, IRS is coming after you because that is capital gains. That goes for crypto. That goes for stocks. Any amount of money you all are making in this, you have to report this. So if you're really serious about doing trading, make sure that you keep all your earnings. That's right. It's like you writing this down. Remember I said a trading journal? Write down your wins. Write down your losses. It doesn't matter if you won or lost, you want to keep that because if you made a loss, that can be a deductible. If you win, that's capital gain. So you always have to keep this. What is the difference from an unregulated broker? Unregulated broker, here's the bad part. When it comes to pulling your money, let's say, for instance, you made, let's say, $500,000 in the market. Now that's your money. It's sitting in that brokerage, right? Well, what happens when they go belly up? You can't go ahead and call over there to the Netherlands and you start asking them like, hey, bro, they just went belly up. Well, that's all my money. You can't report that. Who are you going to call? You going to call overseas? How are you calling overseas? Your money is gone now. So that's why we're telling everyone start using regulated brokers. Even though it's harder, I recommend everyone use regulated brokers because that's how your money is secure. In an unregulated broker, you can make a lot of money, but you can lose it as soon as it goes belly up. And it can happen at any time. The way how I would tell anybody, if you're going to utilize those brokers, and this is how you do, this is how you find out what those brokers, for any broker that you feel like you really want to know.
What would be a reputable company to start out with in terms of a broker?
Forex.com. Forex.com. Yeah. IRS, they look at them. They are regulated. They have that inside the United States. So guaranteed. I love the fact that even when you trade with Forex.com, they do announce that. They will go ahead and send you monthly bank statements, how much you made, how much you didn't make. So therefore, they're keeping that up. So then when it's time for you to report for taxes, they'll go ahead and do that for you.
What's the broker's fee? What's the managing fee?
Managing fee. So before you can even start out in there, for you to even make a deposit, it has to be $100. It's a $100 deposit fee before you can even start. In order for you to go ahead and even fund your brokerage account, you have to put in at least $100 for your deposit. Just like what Crypto Cody said, you have to do the KYC, you have to do your verifications and everything, get that up and running. But the major thing is finding some relationship with your broker. As the guy was saying on the video earlier, he was right. There's some currencies that you can purchase into, and the longer you hold them, the broker will pay you just for holding on to it. So while being inside the market, there is many different ways for you to make money. Some people will go ahead and get into this where they're holders. Now, so let me break this down. There's another part. If you all are taking notes, this is something I would recommend you write down. There is the different type of brokers. You have 3 different types of brokers. Not brokers, traders. You have what's known as a scalper. A scalping trader is someone that likes to get in and outside the market. These are people that make fast money, but they lose the most. Why? Because if you are not a shooter, do not even go ahead and step up to this. A scalper basically knows the increments in his head of how much he wants to make inside the market. As soon as he gets in, he's in and he's out. If he's trying to go in for $50, he knows has his maximum risk for him to go into the market, so he will adjust his currency. So like, remember I was telling you all about if I was to do a 0.01, 0.02, 0.03, what you're doing is you know the increment in your head, and now you know the maximum return that you want to get. Now this is the risk and reward. If you're going to risk, a 0.05, and you know for a fact you're starting off with 50 cents, you got to know the maximum risk. If I was to go ahead and risk this, am I risking $50? Am I risking like 40? What is it? What is it that you're risking? So as soon as you take that risk, you want to know the reward. If you know your risk and you know your reward, then I recommend you can go ahead and be a scalper. But like I said, these are the people that they will lose a lot of money, but if they know what they're trying to get out of it, then most definitely they'll make that. Me personally, I'm a swing trader. Swing traders are the type of people that will go ahead and sit inside the market. They'll sit in the market. It can take months. It can be weeks. It can be a few days. But who knows? Like, so it's like the longer you hold, the more money you can make. So if I'm someone that likes to do a 0.01 and I just trade one pair, I may go ahead and lose, possibly if the market goes in the wrong direction, I might lose $5. But my gain in returns may be 10, all because I'm sitting on a 0.01. Now, a lot of people don't have that much patience like I do, but I do. So if you're a swing trader, that is someone that likes to, like, basically, you don't like that fast adrenaline high that scalpers get. So you just like to be a swing trader. So swing traders would just go and take a trade and they will just let it last. That's it. You just sit inside the market. Same thing with like a lot of stock traders do. You basically buy the stock and you just let it ride. As long as you got the leverage, you got the capital to hold over to it, you just let it ride. Others are intraday traders. Intraday traders, they're more so like they look for like those moves that's inside sessions that they're looking for. There are three major sessions that you will have. You have the Asian session, the London session, and the US session. London starts at 3 o'clock. It starts at 3 o'clock in the morning, all the way until 10 o'clock. So it merges in with the New York session. New York session is around 9:30. Now, here's the thing about that. These sessions that I'm talking about are the sessions where people are making the most money. The most money that you can really make is between two sessions when sessions lay over. When they roll over, not lay over, roll over. When they roll over, that's going to be London going into the US. If the London and US session roll over, this is where you make the most money. This is where people's 401k is. This is where the major market, this is where the major players are. This is where the investors are. This is where the brokers are. This is where the banks are. When those roll over, that's when you see a massive influx of where the money goes. So like this even talks about, like, say for instance with Apple, when Apple's announcing things, when it comes to like certain people that's getting on there on Bloomberg, I do believe there's a guy that gets on, and then whenever this man speaks, his name is Powell. I don't know if you all ever heard of this guy, but whenever Powell speaks, he moves the market. He moves everything. I'm talking about every single time this man Powell speaks, he moves the market because people are afraid of this man. He go ahead and say crypto gonna go ahead and just decrease, bro. People will take their money and run. That's how much influence this man has when it comes to the market. But look for his name. His name is Powell. If you ever watch Bloomberg, look for Powell, and whatever you see like news, because that's something that most people talk about in trading as well. They talk about news. When you see news is like that massive influx that's going to go ahead and get the market moving. Okay. And that's only happens for every session when it opens up. So let me go back to what I was talking about, what intraday traders. Intraday traders, they get long moves. They're not scalpers. They just go ahead and trade that session. So if they trade for Asian session, they're looking for Asian pairs, meaning anything that ends with Japanese, anything that ends in JPY, anything that ends in euros. Okay. Yep, Forex Factory. That's also a great one. You can use Forex Factory. They'll also talk about news. So I've talked about traders. I've talked about brokers. Is there anything in particular that you're looking for? JR, that you want to know?
If I had $1,000,
That's your main question.
if I had $1,000 right now,
mm-hmm.
and I wanted to get into Forex trading,
mm-hmm.
and I wanted to swing my ass into the market to turn
mm-hmm.
my $1,000 into $10,000, what is Survival doing right now?
What's Survival doing now?
What is Survival doing?
Survival, what he's going to do is he's going to go ahead and play the game right. I've been out there. I've heard a lot of gurus. I've heard a lot of stories. And I've heard a lot of people go ahead and tell me that this is what they doing. I ain't doing that. When I first started in trading, I started when I was broke. I'm talking about, bro, I was living off $50, making $50 here, making $50 there. It wasn't like everybody. Like, I'm not trying to be flashy. You got $1,000, go ahead and trade the pairs that you like. United States dollar. Just start off with the dollar. You see a lot of people, like right now, you see a lot of people that trade gold. You want to make a lot of money? Trade USD JPY and trade gold. Now, if we want to stick with a Forex pair, let's just use the United States dollar versus Japanese yen. These are the two major players right now. If we're going to go ahead and do gold, okay, yeah, we're going to go ahead and do gold. Gold is a major commodity. When people are losing assets in stocks, where do you think the rich place their money? They place their money in metals. Right now, have you all noticed that people are buying gold up left and right? Why do you think that is? They're buying gold left and right because they want to hide their money. So what they're doing is they're hiding money inside what? They're hiding their money into gold. This is how they hide their money. When it comes to massive players, especially investors, they know where to put their money just in case it goes belly up. If the market goes belly up, they're putting in metals, they're putting in futures. They're doing these things because they want to hide their money. Investors, just as well as banks, they know what they're doing. They're the only ones that's really moving it. Major players, they don't like to lose money. So that's what they're doing. They're hiding it. So would I be trading USD, JPY, and gold? Here's a survival tip. Anytime gold is buying, United States dollar selling. Anytime United States dollar is buying, gold is selling. That's how you can make your money on both ends. Because if I know United States dollar is going up, that means I'm buying. If I see that gold is in there, gold is selling. This is how it's always been. Same thing with Japanese yen and the United States dollar. That's why I said you can always utilize that pair. If I know that the United States dollar is buying, I'm going to go ahead and buy it and I'm going to sell gold. If I see gold is buying, then I'm going to go ahead and buy gold and I'm going to sell the United States dollar. You can make your money every time. Now, for you, JR, like when you said like $1,000, it may take some time. But as long as you have the game, as long as you have patience, it's going to play out every time. Now, later on,
go ahead. No. You can finish. My bad.
Okay. So once you have once you gain a certain amount of capital and you gain amount of confidence in trading, then that's what I can say you can start going into SPX 500. Then you can start branching off to NAS 100. Then that's when you start realizing, like, okay, I've gained this confidence where I know what I'm risking everywhere. But most of all,
the SPX 500 and this other platform that you're talking about, what's the difference? What's the difference in that? Is that still trading, or is that a different level of trading?
That is still trading. It's just it's more volatile. When it comes to like when it comes to Forex pairs are not there. They have some pairs that's extremely volatile, like GBP USD. That's an extremely volatile pair, so most definitely have a lot of capital. But when it comes to using Forex pairs, it's basically a way of person getting into trading currency, but not worrying like, oh my God, it's moving so fast. It moves slowly and steady, but guarantee as long as you play the waiting game, you'll be able to make some money. So my thing is this: once you get into futures, it moves a whole lot faster. Let's put it like this. Okay. When I first got into trading, my lady at the time I was dating, she had traded in US 30. US 30 is a monster. When I say it's a monster, you can have $10,000. You can have $100,000. You can have $500,000. You can have $1 million, and you can lose it like that. My lady had $15,000. I was just coming home from work. She had $15,000. She put all her money in to trading because she saw how much return could happen when it came to trading this pair. Now she showed me off a demo account. That's something that you all can do too. You can do demo accounts before you actually trade your real money. She did a demo account. She traded US 30. She saw how she made 15K. She made 15K in less than 15 seconds. Like, that's incredible, right? I mean, who wouldn't want to try that? I mean, like, bro, that was like, oh, that pulled me. I'm like,
Shit, I'm like, you made twice as much as what I could make at my job. Like shit, I'm looking at a check that's like $868, and you over here. Yeah, I didn't tell her to do this, but she was like, "Do you think I should put all my money inside trading?" I was like, "No, babe, I really don't think you should do it. You do it, but put a little bit." She put it all in there, Jr. Yeah, Cody, she put it all in there.
Yeah.
Come home, she lost all her money.
Oh. Oh.
That's tough.
I had to hold my baby for a second. I said it's gonna be okay. I mean, like, to watch your earnings disappear just in the blink of an eye because
somebody sniped the shit out of that.
Yep. And you know, that's why I said greed comes into play. If you have that greed in you, where it comes like, oh my God, okay, so I'm gonna get inside. And this is why I say you all have to know what your risk is for you to receive a reward. When you hop into the market, if you do not have this under control, you're going to lose every time. Otherwise, you're just playing a game of chance. We're not playing a game of chance in the market. You're a risk taker. So you already noticed, you've already calculated what you're risking. If you're risking $500, do not go past $500. Don't do it. Because as soon as you do that, that's what the broker is waiting for. The broker is ready for you to fuck up what it is that you have. If you don't have a game plan every single time you enter the market, he is going to capitalize off of that every single time. And that's what happens to my lady. She got that greed and it was like, got you.
Let me ask you a question, sir. If somebody in here that's watching in the chat is interested in learning Forex trading, are you open to mentorship? Is that something you're thinking about in the near future? What's the plan for Serve in the Forex trading space?
So once upon a time, if you all ever found me, I was in an MLM program, meaning that I was signing up people. I did it all, the whole mentorship. I'm going to be your mentor. I'm going to help you make money. I'm going to help you do it. But nowadays, I've given up that because when it comes to trading, it's about the person. You have to understand what's your why. My why is because I want to buy my mother's house. I want to buy my mother's house. My why is that I don't never want to go broke again because I know what that feels like. My why is that I want to be the first multi-millionaire of my family. And the way how I'm going to do that is in silence. The real money is not me telling you all, oh, you can make this massive amount. No, bro, no. For me now, when it comes to mentorship, I'm done with that because I dealt with so many emotions. My vision was just like, look, as long as you're learning this, you'll never go broke again. But you have to play with this respectfully. Yeah, it could be a game to you if you want to play it like that. But if you don't, then this ain't it. You know, I don't believe that people get into trading because they really want to learn. They get in because they look at this as a get-rich-quick scheme. And if you get into it as a get-rich-quick scheme, it's not going to work. Forex is the same as stocks. Forex is the same as cryptocurrency. If you learn Forex, you can trade stocks. You can trade stocks, you can trade cryptocurrency. So I would say it's a great leveraging tool if people want to get in there. There's three major things that you will find in trading. It always happens, regardless of whatever market it is. You have what's known as, you have bullish, you have bearish. Whenever we are in a bullish market, the market's going up. Whenever we're in a bearish market, that means that the market is selling, going down. Then what you have is, it's known as confluence. This is where we're having like where the market's moving sideways. That means it's not going up. That means it's not going down. Basically, what's happening is whenever you see confluence is basically where all the major players is coming together where they're trying to figure out where the money's going to go. Crypto does this. Stocks do it as well as Forex. Crypto's a little bit different. The only reason why it's a bit different is because when it takes off, it takes off. Like you said, Cody, when it takes off, it's gone. I mean, like, and it can happen. Like the best time to trade crypto, I want to say, is during the weekend, because Forex closes every Sunday. On Sunday, it opens at 5 o'clock. 5 o'clock p.m. 5 o'clock p.m. is when the market opens when it comes to Forex. It closes at 5 p.m. on Friday. Well, here's the thing that's not closed. Crypto. That's the perfect time to trade crypto is during the weekends. So anybody wants to trade crypto, you can get into it. Anybody that wants to trade crypto, I say if you really want to trade it, you want $10,000. If you're going to start playing in it, please have $10,000 because that is a monster. When it start hitting pockets, it start hitting pockets.
I'll tell you a number that I came across, and then we're gonna get into this quick intermission to get into the stock sector. Somebody took $30,000 in 2 years with investing in crypto and investing in the stock market. They turned $30,000 into $2 million. Nice. Oh no, excuse me. No, they turned $30,000 in 2 years to $8 million.
Yeah.
Investing in the stock market and crypto. So on that note, we're going to take a quick intermission. We're going to digest about 5-10 minutes of this investing for beginners, how I make millions from stocks. Check this out.
Bang.
Join eToro's Learn and Earn Challenge and earn cash. It's easy. Visit eToro.tw.
I want you to imagine for a moment that you started investing in 1985. For a couple of years, your money keeps going up and up until
Black Monday. They're calling it the Monday Massacre.
Wall Street had its biggest one-day drop in history.
The results of the decline will hit millions of people.
Up until this point, your friends probably thought you were some kind of genius, but now they're urging you to sell. But you ignore them, and slowly but surely the market recovers until
the Nasdaq index in free fall, down nearly 10%.
Driven by technology in general and the internet in particular.
Traders and investors shell-shocked.
Your friends are on their knees begging you to pull your money out, saying things like it's time to take your profits before you lose everything. But you hold strong and things start going back up until you're hit with...
It was one of the most profound events in generations with huge consequences.
Little did you know, you're in for the ride of a lifetime until...
The global economy will contract by 3% this year, the worst downturn since the Great Depression.
Surely this is the end of the stock market. But as things reopened, the market soared 27% from its low, setting new records. What a comeback. Something I didn't mention is the guy that invested his money in 1985 was actually me when I turned 18 years old. The average return over this time period was 11.23% per year. So if I'd have only invested $250 per month during this time, then I would have made $1,841,521.08. That's a return of over 6,000%. But between us, I invested a lot more than that. So now you understand the power of investing, I think it's time to jump into the details. Honestly, it's amazing how many people talk about investing, but don't actually show you how to do it. So I'm going to quickly walk you through how to invest in stocks on your phone. Of course, remember, I'm not a financial advisor. This is just the way I do it. And before you do any of this, make sure you have an emergency fund of 3 to 5 months of living expenses. The first thing on our list is to set up an account. A lot of people get stuck at this stage as there's a lot of different investment platforms out there and also different types of accounts. But trust me, it's much more simple than it first seems, especially now you can do it all online. When I first started investing, I had to phone up the stockbroker every time I wanted to buy a stock. Let's use the Trading 212 app. I'm going to be using my son's account as my account's pretty messy as it has a bunch of free shares. He's actually been running an experiment on here for the last 3 months, but we'll talk about that in a bit. The account you open should be a tax advantaged one. This means you won't have to pay any unnecessary taxes. These are known as stocks and shares ISAs in the UK and Roth IRAs in America. I think the UK option's much better as you can invest up to £20,000 a year with without paying capital gains tax on your profits, and you can take out your money whenever you want. In contrast, Americans have to wait until they're old and retired, and they have a much lower limit of $6,500 per year. Feel free to use whatever app you like. This is just one of my personal favorites. Next, we need to deposit some money in order to start investing. Most apps make it pretty easy to deposit money. We just have to click these 3 lines and then select deposit funds. As you can see, this brings up a screen with lots of different options like instant bank transfer, debit card, and what we're going to use, Apple Pay. Let's just put in 400 so we can invest in some stocks together. Feel free to invest whatever you feel comfortable doing. Curtis, I'm going to need your face for the phone.
Right, hang on.
This next step is super important. Getting some free stocks. Since I was planning to talk about Trading 212 anyway, I reached out to them to see if they would be interested in sponsoring this portion of the video. They agreed, and they're offering a free stock worth up to £100 to anyone that uses the code Tilbury when they create an account. Plus, you can get more free shares by inviting your friends. Both of you will get a free share as long as they fund their account. So don't waste your invites and invite brokies. And also, don't worry if you've already opened an account within the last 10 days. You can still use the promo code Tilbury in the app and receive your free share. Right. Now we need to plan a winning strategy. The first thing we need to remember is that investments go up and down, so it's very hard to pick winning individual stocks. That's why I prefer to invest in all of them. You probably think this sounds a bit crazy, but stay with me. I love listening to music. I'm a big Deacon Blue and Queen fan myself. But whatever you like, if you've ever listened to the radio or used Spotify, you'll be familiar with the music charts. The better the songs perform in sales and downloads, the higher up they go in the charts. On the other hand, if a song drops in popularity and sales, then it drops out of the charts. This is almost exactly the same as investing in an index fund. All you have to do is switch out the songs for companies. Let's take the S&P 500 for example. This is a list of around 500 of the largest public companies in the USA. The big dogs being Amazon, Google, Apple, and Tesla. And just like the music charts, if a company does poorly, then they risk being removed from the list. Here's the cool part about an index fund. With just one click, you're not just investing in 1 or 2 companies, but in every single company on the list. So if one doesn't perform very well, your money's okay as you're spread across all of them. So how can we put this into practice? Well, we need to automate our long-term investments. Remember I said my son had been running a little experiment for the last 3 months on his account? Well, he's been investing £5 into the S&P 500 every day. Why £5? Because that's about the average price of a Starbucks coffee.
Imagine being able to build anything just by thinking about it. Meet Base 44, a complete
coffee. Automating your investments like this is a great idea as it means you can just set it and forget it. His portfolio is actually doing pretty well. As you can see in the green, his return so far is £36.46, and that's a return of 5.03%. Not bad for a little experiment. If you want me to keep you updated with this when it reaches the 6-month mark, let me know in the comments. To set something like this up, all you have to do is select pies and then press the plus icon. Now you can select whatever stocks you want to include in your pie. For this demonstration, let's just keep it easy and pick this S&P 500 index fund. By the way, look out for if it says accumulation or distribution in the brackets. Personally, I always go with accumulation as it reinvests your dividends back into the stock automatically. The less I have to think about, the better. Now let's tap add to pie and then the arrow button. If there was more than one stock in here, then we'll be able to change the percentages with this slider. Right, tap next and then auto invest. This value projection is really awesome as it shows you how much money you could make based on historical averages. Of course, when you invest, you can get back less than you invested as investments can rise and fall, but it's still a great way to get an idea of how much you could make based on data-backed projections. I mean, say we invested £250 a month for 31 years. You'll only have invested $94,000 of your own money. Your portfolio would be 1.14 million. If we expand this to 40 years, your portfolio will be 3.56 million. It's worth having a play around with this as it's quite motivational seeing how much money you can make with a relatively small amount invested per month. And to all the people in the comments saying, well, what about inflation? it will make your money worth far less. As long as you're investing and not just keeping your money in a bank account, then inflation is not something you need to be extremely worried about. Additionally, I increased the amount I was investing to keep pace with inflation. Now, let's pick some individual stocks. Although I wouldn't recommend that beginners bother with picking stocks, I know many of you are going to try anyway, especially since you've seen people make millions from the right meme stock that skyrocketed, like GameStop. All right, so there's basically two ways to take a stab at figuring out what's going on in the stock market: technical and fundamental analysis. Those quick deal day traders are all about the technical stuff, poring over price charts and patterns, thinking they've got the scoop on how the stock's going to swing just by eyeballing the ups and downs. Now me, I'm more of a long-term player. I dig into the nitty-gritty of a company's fundamentals, you know, the financials, who's steering the ship, and how well known the brand is. I reckon that's where the real lowdown is for predicting a stock's long-term success. So I sift through income statements, balance sheets, and cash flow statements. When I throw money into a stock, I'm in it for the long haul, at least 2 to 5 years minimum. To find stocks, simply click on the magnifying glass icon. Trading 212 have made it incredibly easy to find stocks by providing various lists such as big tech, popular ETFs, banks, and 212 have made it incredibly easy to find stocks, simple balance sheets, and cash flow statements in a stock's long-term success. So I sift through income statements, balance sheets, and cash flow statements. When I throw money into a stock, I'm in it for the long haul, at least 2 to 5 years minimum. To find stocks, simply click on the magnifying glass icon. Trading 212 have made it incredibly easy to find stocks by providing various lists such as big tech, popular ETFs, banks, and most owned. There's also lots more. Take a look when you find a bit of time. You can even go on the social feed tab and see different pies that other users have created and copy it for yourself with a single click, so you don't have to find the stocks yourself. On the stock page, you can see the price graph, and by scrolling down, you can actually access all those important financial documents I discussed earlier. Now, let's buy a stock. Tesla will do. Now this pulls up a page with a couple of different options. The first one is a market order. A market order is just like when you go to the supermarket and pay whatever the price tag says. A limit order, on the other hand, is like going to a boot fair and haggling for the best price you want. You can put in a price that you're willing to pay, and if the price ever gets to that level, then the app will purchase the stock for you. As a beginner, that's all you really need to know. There's no point diving into the other options. Let's buy £400 worth of Tesla so I can show you how it's done. The final step is to press send by order, and boom, we're now part owners of Tesla.
And there you go. That's a easy way to digest what it looks like to purchase stock, right? If I look at that video really quick and I go back to when he opened up the little pad, the 7 steps really quick.
Trade futures on the go with Ninja Trader Mobile. Place trades with simple order management tools.
7 steps were
pick some in,
right? We're going to, number 1, we're going to set up an account. Me personally, I have Fidelity. All right.
Yep.
I'm gonna set up an account. I'm gonna put here example Fidelity. All right. Then 2, we're gonna deposit money. All right. Let it be, you know, $100, 500, or 1,000. But we're gonna deposit money. 3, get the free stocks. That's when you send out referrals. 4, plan a strategy. Plan a strategy. Winning strategy. Plan a winning strategy, right? Plan a winning strategy, which means allocating and dollar cost averaging. I'll explain that here in a second. 5, automate your long-term investments. Let's go back to utilizing the term that Cody used. Convictions. The 5 companies that you're convicted in. that have been here long term, maybe even 4 convictions and one that's just starting to make a buzz. That narrative, right? AI, technology, etc. NVIDIA. Pay attention to NVIDIA. I'm gonna get to NVIDIA here in a second. 6. Pick your stocks. Pick your stocks. But me, I'm gonna give you guys some free game. I don't pick individual stocks. I invest in index funds, which, you know, I'll throw $1,000 into an SP 500 and it'll allocate automatically into the companies that are producing. So I'm always making money, right? Step 7. What did he say? Invest. What was the step 7? Step 7, make the investment, right? Step 7, make the investment. Make the investment. Buy the stock, right? Purchase the stock. Purchase. Was that number 7?
Individual stocks. Although I wouldn't recommend that beginners bother rocketed, like GameStop. All right, so there's basically 2 ways to take a stab at figuring out what's going on in the stock market: technical and fundamental analysis.
You're going fundamentals. So look at your technical, and fundamental analysis. Right? That's in everything. All right. Yeah. So boom, that's it right there. Grab that, throw it up there. Here we go. So let me give you guys some game. I'm on Fidelity. I'm gonna open up my Fidelity account right now. Where is it? Okay. So when you open up a Fidelity account, what you're gonna do is you're gonna talk to a rep and you're gonna tell them, I want to open up a Roth IRA, and I want to open up the one where, because there's 2 types of Roth IRAs. You have traditional, and then there's another one. You want to open up the Roth IRA that lets you automatically tax your money when you put it in the account. Why? Because when it automatically taxes your money, when you're ready to take it out, when you're 65, 70 years old, or when you're ready to hang up your boots, you could take out your money tax-free because you already paid the taxes on it. So ain't no Mr. Uncle Sam or like your boy said, serve. What's that comes after the taxes? What's the company called? That comes after your taxes, where you got to pay your taxes?
The income tax?
No, not your income tax. The IRS. There's no IRS coming after you. There's no IRS.
Okay, yeah.
Yeah, it's because it's already taxed, right? So let me log in here real quick, and I'm gonna tell you what I'm personally invested in, right? So I'm gonna go into investing, go into positions. All right. So my first investment I have is I'm in right now large cap index funds. Large cap index funds, they will allocate it to the largest companies on the market producing, whether it be Tesla, Amazon, Netflix, etc. That's a large cap index fund. The next one I'm in is a total market index fund. It's like a large cap, but now it's even more vast. So they're going into, they're stepping out of the 500s and looking into companies that are breaking in and making their way into the top 500. Does that make sense?
Okay.
Right. The next one, because I'm big on global. I'm in international index funds. These are companies internationally overseas that are producing at levels similar to an SP 500. Because, you know, if there's a Netflix American, you damn well there's a Netflix Japanese, right?
Mm-hmm.
I'm showing Thailand right now. There's probably something in that Cody can say and compare to, like, oh shit, this is like a Bank of America, or this is like a McDonald's.
So
but it's
like
not
Grab is the similar to like what you got, DoorDash?
There you go. There you go. right? So definitely look into that.
I'm hungry right now. I'm about to order some food. That's why. That's all.
You're good. You're good. I'm also invested into a trust fund of gold.
Okay.
So they're the company, they allocate the gold. I'm invested into the actual trust of the gold.
Okay.
Right? So it's not the physical gold, but it's the trust of the gold.
Mm-hmm.
I'm also invested into the trust of silver. So as the company is allocating silver, I get a percentage of that.
Okay.
And the company that I'm utilizing, it's called iShares. So look into iShares for silver and gold trust. And then I'm also utilizing iShares to get a Bitcoin Trust ETF. And I'm sure Crypto Cody knows exactly what an ETF is, right? So we're going to be looking into it, right? So that's what I have allocated right now. And what I tell people to do all the time is every time you get paid from your 9 to 5 or your side hustle, please take 10 to 20% and pay yourself first. That 10 to 20% is either going to go into your yield savings account or is going to go into one of these portfolios, whether it be crypto investing, Forex investing, or stock investing. Take 10 to 20% and pay yourself and throw it into crypto, stock market, Forex, whichever market you're in. If you're in both, allocate that 3 ways. If you're in 2, allocate it 2 ways. If you're conservative and you just want your money to grow, throw it into a yield savings account, 4.5% at a bank that's a credit union. Most credit unions offer 4% to 4.5% on yield savings, or go as far as Cody said, where you take that money and you put it somewhat like a yield savings, but on Coinbase for staking at 4% a week. Now you're multiplying. You're times 10. You're times 100 when you're doing 4% a week as opposed to 4% a year, right?
Definitely balance it out, family. Definitely balance out.
Balance
I would
it out.
definitely
Yeah.
take 2 of these and at least 2.
And go
at least 2 of
at
these
least
investment
2 out of the 3, and plan your winning strategy. For me, what I do is I'll take, most of my pillow is in the Roth IRA because that's the long term. So 90%, 80 to 90% is in my Roth IRA. The other 10 to 20%, I have it in the yield savings, and then I have it in the crypto market, right? So that's so that way I have play. I don't want to call it play money. I don't want to utilize those terms, but I'm having money make money while I'm sleeping. So that way, if I do hit something significant, I grab from those accounts and I throw it into the Roth IRA, into the long-term investment. So naturally, what's happening is that my hustles is paying my foundation, but my investments is paying the long-term goal, which is retiring as a multimillionaire. Right. So that's how we're doing it right now in this space. So make sure you set up your accounts, deposit your money, get your free stocks when you do your referrals, plan your winning strategy, diversify your portfolios, make sure you're looking into any of these 3 facets, stake, yield savings accounts, and also even go as far as this, have an emergency fund. An emergency fund can be simple, $500 to $1,000 sitting in your closet somewhere in a safe. That emergency fund, if your washer goes down, if your maintenance goes down on your vehicle, if your AC goes out, you have something that you can take out of your emergency fund to pay it. It doesn't have to come out of your personal account where you're struggling for it, or it's coming out of your check. Does that make sense?
Yeah.
And that's the game today. That's the game today. If there's anything in the chat down below, if there's any questions you want to shoot out before I let these two legends go, please, you can shoot it out in the chat now, and we'll answer any questions you have. If you wanna follow them, make sure you pick up Crypto Cody on the Discord. What I'm gonna do really quick to make sure you do have a direct access to Crypto Cody, right, is I'm going to send Crypto Cody my Discord and I'm gonna welcome in him right now into the space so you guys can add him right now as a friend. Let's not waste no time. If you're serious about this academy and getting this game and getting this book as I am, because I will be paying the $30 to get the book to show my boys some support. Because we're gonna lead by example. So let me go ahead and get that link right now for the Discord and get them in here and introduce them to the space.
Nah, Jr. This is real because everything we talked about today is action based, right? Like
100%.
survival skills. He told you exactly what to do. I told you exactly what to do. You told people exactly what to do. Like a lot of people, they talking about retiring early. They talk about retiring rich, but what are the actions you're putting in place currently right now? You know what I mean? We're not talking about getting rich today, tomorrow. Everyone here, survival skills, myself and you, JR, we're talking about taking daily steps, and we gave you action-based things to do to actually retire wealthy. So
100%.
yeah,
100%.
we're not just talking about it. We actually
These are really tangible. 100%. These are really tangible goals and accessible information. All we did was just provide it to you in 2 hours, but this is years and years of research, years of trial and error, years of experience in the market, and years of investing. You know what I mean? Like, we're all going to be rich one day, but it's a long-term game, and you gotta be willing to take the necessary steps to invest in yourself. If I want to learn some game that Cody has in terms of, you know, taking my crypto knowledge to the next level, I gotta get the book, because there's information he has that I haven't figured out yet, or haven't been able to search for, or hasn't been provided to me. And now I have somebody in my corner who's willing to provide it with me and take me step by step. So, team, you know how I am about our community. It's always going to be about solidifying, you know, wealth building, finding the tools, finding the resources, finding the information to you, providing it to you, and then showing you a literal step-by-step process within myself as the leader of this community to lead by example, because I can't tell you it works without doing it. So do it with me and we'll make it work.
And I'm pretty sure there's a lot of people that's out there that's afraid of investing. If you're afraid of investing, then use the demo accounts. Like I talked about earlier, when it comes to you all trading with Forex, you can utilize demo accounts. Any broker that you end up finding, they will have a demo account where now you can kind of get your feet wet, to go ahead and say it. You can put as much money in there. Usually I think they have the max of $50,000. So you can trade with a max of $50,000 just to go ahead and see what is it like, what is the buy, what is the sell, to get you interested into it. The other part is some of those brokers, they do have some videos where you probably may be interested in what is a higher high, what is a higher low, what is consolidation. These are things that they're going to explain over time, because trading is free. That's the point. That's the major point I think a lot of people forget. Trading is free. It's just you trying to get a return on your investment. For me, when I first started, the only thing that I kept telling myself was this was information that was hidden from me. This was information no one told me about. Like, you know, Forex really was something that happens in the bank. You don't believe me? Go to your bank teller. Next time you go to your bank teller, ask him, is Forex a real thing? Yes, it is. It truly is. Your money that you make at your bank, that money is being pocketed. And that's the same money that they do. They put all your money that you make that's in your checking account right now, that's in your savings account right now. They trade your money to make thousands of dollars to go ahead and create those things that we end up getting loans or business loans. This is how they're making that money. So therefore, that's why when everyone says like, oh, this is not real, no, it is real. This is they even got a job for you. If you really know how to trade professionally, you can actually go ahead and trade professionally at a bank. But I guarantee you probably might not see the light of day, because if you like that, yeah, bro, you an asset. The government not letting that go. You can demo. Yep, you can demo with TradingView. TradingView has a lot of, if I'm not mistaken, it's a lot of, oh, what is it? Not trading tools. Indicators. They have indicators. Some people that like to do technical analysis, a lot of traders such as myself, you have to revolve around technical analysis. This is the part that's kind of boring to a lot of people because it's like, oh my God, I'm looking at a chart. When you look at the chart, technical analysis is basically trying to understand between support and resistance. With every single commodity or anything that you're trading, even when it comes to crypto has a ceiling and also has a floor. Crypto has a ceiling, also has a floor. Stock has a ceiling, has a floor. The way how I look at it, and my mentor broke it down to me, was think of it like a football field. He said, look at it like as a football game. Whenever you have the bullets, now here's my thing when we're talking about that game. When it comes to playing a game of football, what usually happens? One team ends up getting the ball and then they have to run into the other side of the field, right? That's how the game's played, right? So as soon as it reaches one side, it has to turn back around and do the same thing else. That's how he kind of got me to dumb it down to where it was like, oh, okay, so that's what it is. If the market ends up happening where it's in a bullish run and it ends up hitting the ceiling, once it hits the ceiling, it has to turn back around. It has to retest what it just hit. That goes for crypto, that goes for stocks, that goes for Forex. So when you start learning about your technical analysis, it's going to be trying to figure out, okay, I see the market's moving here. It made a high right here, but now it's making a higher low down here. Now what we're trying to understand is, okay, is it going to break through this ceiling? Because if it breaks through that ceiling, it's going to try to find another high. So that previous high it just broke now becomes your floor. This is how gold operates. This is how crypto operates. This is how stocks operate. I know it sounds boring right now, but I guarantee you the longer you stay into it, it'll finally like start making sense.
And that's a good reminder, survival skills. Like if someone right now is feeling overwhelmed, like stocks, crypto, Forex, you know what I mean? Just pick one because the knowledge is interchangeable. Once you learn technical analysis, once you learn fundamental analysis, you could apply it to any asset, meaning stocks, crypto, Forex. You know what I mean? So all of these things, all these tools and skills that each person's telling you, you can apply it and use that knowledge in the other sector. So that's why it's very easy right now for any one of us to jump in and teach any one of us on this screen, because survival skills understands exactly what the terminology, because that is for everyone outside looking in. The biggest problem right now would be the terminology, the jargon, the words that we're all using. Support, resistance. You know what I mean? So once you guys understand these words, that it's a ceiling and a floor, that's what support and resistance is saying, then we can use that in any of these asset classes. So just whatever you like and whatever is like speaking to you. If it's stocks, it's stocks. If it's Forex, it's Forex. If it's crypto, it's crypto. Whatever it is, just like dive into it a little bit and you'll be able to understand all of it. So just digest little pieces at a time, like survival skills just said, man, and everything will work out for real.
And even if it feels overwhelming now and overwhelming later when you're diving into it, do it in bits and pieces and, pace yourself. I like to give myself maybe 30 minutes to an hour a day, all in on crypto, and then 30 minutes to an hour a day, all in on stocks. You know what I'm saying? I know that me personally, I still have to figure out currency trading and Forex. And I haven't quite, me personally, dwelled into that world because I'm comfortable in the asset classes that I'm currently in. But do not do yourself a disservice. Learn all three facets and then find what speaks to you and what works for you as the investor. Because obviously we're not financial experts. This is all opinion. If you want to reach out to a financial expert, do research in your state and county and reach out to a financial expert. But you got to even be careful with them because they'll mess around and take your money. I'll bet on myself before I bet on a financial investor. to allocate my money for me, because money might disappear in more ways than none. So, but I want to thank these brothers. Thank you, Crypto Cody. Thank you, Survival Skills. Thank you, ONTL The One. Shout out to the whole team that locked in, from Crypto Cody side to Survival side to to Unified Media. Absolutely amazing segment. If you enjoyed the segment today, make sure you share the link out to your friends and family. Hit the subscribe button, hit the notification bell. Stay tuned, because we come here every Sunday to drop some gems for about 10 episodes, and then we take our we take our break and go into our other platform. But there's 3 other seasons of Unified Media. So if you just click on the live section on YouTube, you cycle through the descriptions and the titles, whatever speaks to you, digest about 5, 10, 15 minutes of that, share it out to your friends and family. You can follow us everywhere at Unified Media Podcast on all pages. It even has its own YouTube channel that you guys can subscribe to. I appreciate your guys' time and your experience and your expertise. Like I always say, protect your mind, protect your peace, and protect your home. I'll see you guys next Sunday. Stay blessed, brothers. Appreciate y'all.
All right, man. Thank you, JR. Thanks for the opportunity. Shout out to the chat, man. Love y'all.
Absolutely. Absolutely.